So hello friends, welcome back to our channel. Today in this learning video we would see what is pre-market session and what is the need to have a pre-market session, what is the time allotted for pre-market session, and how the allotted time is divided into three parts, and what's the significance of each and every part of the allotted time in pre-market session, and based upon all this, how opening price for a stock is decided in pre-market. So let's have a look at what is the need for pre-market and basics of it. So for Indian markets, pre-market is from 9 a.m. to 9:15 a.m. After 9:15 a.m. pre-market session is over and you can start trading. So we would look at how trading takes place in pre-market session and how the opening price for a particular stock is decided. So we will understand that what is the need to have a pre-market session. So let's say XYZ stock closed at 100 rupees price. So overnight there are many influences all around the globe of various news and foreign markets. So if pre-market sessions are not holded, then you may see very high volatility and abrupt movement in the stock. So to curb the opening volatility because of overnight influences of global cues and global markets, pre-market session of 15 minutes is allotted. So the time from 9 to 9:15 is splitted into three parts. Part 1 from 9 a.m. to 9:08 a.m., part 2 from 9:08 a.m. to 9:12 a.m. and part 3 from 9:12 a.m. to 9:15. So what happens in part 1? From 9 a.m. to 9:08 a.m. you are allowed to place orders for a particular stock, whether you want to place a buy order or a sell order based upon what are the overnight influences on the stock based upon global cues and news. So from 9 to 9:08 you can place buy and sell orders at the price which you feel as wholesale price for that stock. In part 2 from 9:08 a.m. to 9:12 a.m. orders are matched and the orders are executed and the opening price is decided. Now how the order matching takes place and how the opening price is decided, we would see it in the next slide. So for you, what is important to understand is that from 9:08 a.m. to 9:12 a.m. the orders which are placed from 9 to 9:08 would get executed, and part 3 is to ensure a smooth transition between the pre-market session and the trading session. In part 3 nothing happens and it's just a halt of 3 minutes. So in part 1 you can place orders for a particular stock, it may be buy order or sell order at whatever wholesale price you feel, and in part 2 the orders are matched and executed and opening price is decided, and part 3 is just a halt to ensure smooth transition between pre-market session and market hour. So now we would see at how opening price for a particular stock is decided based on the orders placed in pre-market session. So here consider a stock XYZ and there are people who want to buy that stock for 200 rupees and 5 quantities to be bought at 200. There are 30 orders for 190, 20 for 180 and so on. On a similar note, on selling side there are 10 orders waiting to get filled at 200, 30 orders waiting to get filled at 190 and so on. So a cumulative sum is calculated because let's say you want to buy a stock at 100 rupees, but if the stock itself is opening at 90 rupees, then you would definitely want to buy it at 90. Similarly, on selling side, if you want to sell something at 100 rupees and it's offering you 110 rupees, so you would sell it at 110 rupees. So a cumulative sum is calculated of buyers and sellers. So let's say there are 5 orders waiting to get filled at 200 and these are buy orders. So if 190 is the best or the wholesale price for this stock, then definitely these 5 people would want to buy the stock at 190. So the total number of orders waiting to get filled at 190 would be 35, and in similar way the cumulative for all prices below is calculated. On selling side, let's say there are 15 orders waiting to get filled at 150 and there are 10 orders waiting to get filled at 160. So if 15 people are willing to sell at 150, they are also willing to sell at 160. So cumulative orders waiting to get filled at 160 would be 25. So this cumulative sum is calculated, and where the maximum overlap or where the maximum orders between buyers and sellers can be filled is evaluated, and in this case we have evaluated that which would be the price at which maximum orders would get filled, and it would be considered as an opening price. So in this case 180 would be our opening price as 55 orders are getting filled. So in this way opening price for a particular stock is decided. So thank you friends, happy trading, happy learning.